think what you must keep in mind is that we've maintained this view of the 720, 770 range for the rest of the year, possibly seeing a slight break on either side of that. Although that being said, that 720 is continuing to support the rand. And if you're looking at levels to watch in terms of technical levels, that in itself has proved to be a very, very significant level. So on the downside at the moment, 720 seems to be the base, purely because you see a lot of importer demand sub that 730 level, which is giving it that support. The main drivers in the market at the moment being the Greek story and what's happening in the contagion in Europe. And unfortunately, you've got a lot of positive data coming out, positive earning results that have been negated by what's happening in Greece. And in fact, this morning we came in, we've got risk back on. Commodities have started to pick up again as you're seeing investors looking for some form of alternative asset class. And we've seen a move back into emerging markets, specifically commodity-based. Obviously, the rand benefiting from the fact that we're still a high yielder despite the interest rate cut that we saw last month.
How do you see the Greek situation unfolding?
I think that at the moment it's quite an interesting scenario because you've got the IMF and you've got the European governments that are in negotiations around who will be potentially allocating specific funding towards this bailout plan. Now, the story is really that they are offering opportunity for the Greek government, and what we need to keep in mind is they're unlikely to see it fail. The concerns are, will the parliaments allow that funding to go through? If they don't, you're still going to see the IMF step in at some point. Will it be adequate? I'm not sure that it will, especially if you're looking at the numbers that they require versus what's been put on the table.
Well, that's exactly it. I mean, 80 billion euros is a far cry from the access that they've got to 45 billion euros. Royce, is this a key concern for you sitting here in South Africa?
Well, I think the Greek story, it's not that material in isolation. And quite frankly, whether there is a bailout or isn't a bailout, the fact does remain that they're spending beyond their means. So as anyone who's bankrupt or is indebted, there's never a happy ending back onto the road to a less indebted situation. That's what's going to happen in Greece. Even if they do get the bailout, the ramifications in terms of slower growth, etc., will pertain to Greece. As far as it impacts us in South Africa, as long as it doesn't spread to Europe, and there's a dramatic impact on the larger economies in Europe, such as Germany, France, which impact the commodity underpin, we should be relatively isolated in South Africa, unless there's a contagion outside of Greece into Spain and some of the larger economies.
But surely there is going to be that contagion out of Greece. How can it's not ring-fenced? This country is part of the Eurozone.
Absolutely. I think that the first thing that we must keep in mind is that they misprinted the figures when they tried to enter the Eurozone. So they got into the Eurozone giving a false implication of what they actually stood for, which I think was the first problem. So they probably would not have been allowed to have joined the Eurozone had the correct figures been dictated. That's the first thing. So now they're wearing a situation that unfortunately is rearing its ugly head. So they have to put plans in place. They're talking about a 3-year plan. It seems unlikely that that's actually sustainable. I mean, if you're looking at decreasing the deficit by 10% in 3 years based on the fact that you don't have growth, you're constraining that economy, you're funding huge amounts of debt, you're having to repay loans, you're having to repay interest. It's not really sustainable in a 3-year outlook. So they're going to have to look at this as a 10-year plan. But the bigger picture for me that's a big concern is what's the fallout going to be of this continued disaster that's happened with this volcanic eruption. I mean, we were talking today, the likes of BMW, Nissan and Audi have been unable to carry on production because of the lack of parts being able to be delivered to them. And what other kinds of productions have been put online? What other kind of fallout are we going to see from the airline industries, etc., and the kind of business that was curtailed by this eruption? Because you're also seeing this kind of thing has had such a negative impact, it's actually outperformed what happened at 9/11. So it's quite significant, and that's impacted specifically the UK and the Eurozone.
Do you sit with Brigid on this one, that we should actually be focusing on the impact of the volcano in Iceland?
Well, and Brigid mentions 9/11, when you look at the amount of money the airlines say they've lost, post 9/11 it took 3-4 days and passengers were moving intercontinental. But yeah, it really has been, planes can't take off. I think SAA is sending its first plane to London tonight. So it's been effectively 8 days since people have left South Africa to go to the UK. And when you look at trade, when you look at the impact on the way confidence will go through economies, then ultimately what you've got is people saying, now what? Just to touch on Greece, the austerity measures, again, I agree with Brigid, 10% in 3 years when the global economy is not growing is just not feasible. It's not going to happen. Spain is fiscally stronger, but Portugal is a problem. So if you look at your next problem, it's going to be Portugal.
Is the volcano on your radar screen at the moment as potentially impacting future investment decisions in South Africa?
No, it's probably in our opinion, it's a short-term impact. It is an impact, but longer term, this is certainly not going to derail the global recovery. And if you look back in the months ahead and the years ahead, I don't think we'll even see this on the graphs in terms of the impact, the economic impact. So short-term disappointment, but we don't believe it's going to derail the economic recovery we're seeing globally.
Brigid, could it be a bigger picture for you though?
I agree that I don't think it's going to have a massively significant outcome, but I do think it's something that we're going to talk about in terms of the ramifications of because we don't really know what those are right now, and specifically what the impacts have been production-wise, etc. Something else on a more positive note, though, was the IMF has actually started to upgrade their growth forecasts, specifically to the US and then to South Africa as well. So that was quite interesting in terms of the outlook for South Africa specifically, and then going into 2011. That's just to add something positive to our outlook. Obviously, also from a South African perspective, as we go into post-2010, that's something that we also need to look at. What is that growth forecast going to look like based on the fact that we're working off very low estimates at the moment? So,
So are you feeling net positive at this stage?
I'm feeling net positive because we're seeing global earnings pick up, specifically in the financial sector. Obviously, there's regulatory issues that have come around with this Goldman situation, but the data is proving to come out positively. We're starting to see a turnaround in the joblessness globally, in South Africa as well. We saw it in the UK today. The jobless numbers were relatively better than what we'd seen before, what we expected. So it feels as though we've turned the corner, and it certainly feels as though we are going on that correct trajectory towards positive growth, but on a much slower outlook, I think, than a lot of people had anticipated.
And Royce, where does Obsidian Capital lie?
From an economic perspective, there's not much to be upset about. Everything's looking good globally and in South Africa. The economies are recovering. Commodities are strong. Commodity currencies are confirming that trend. They're also strong. Leading indicators globally and locally are rising. So from an economic perspective, things are very much on track. And I guess that is why the market was up so strongly last year, looking ahead and preempting what we're currently seeing. So from an economic perspective, things are fine. It gets a bit more complicated from an investment perspective at this point in time, given what markets have done as to how one plays that. But from an economic perspective, things are looking good and are going to get better in the short term.
So do you agree, nothing to worry about at the moment on the economic front?
On the economic front, I'd agree, just that the stronger currency is really hurting South African exporters right now, as well as the local production. You look at your gold mines. Harmony's laid off 3,800 people last week, Goldfields prior to that. So when it comes to employment conditions, really the economy is not ripe for growth right now.
Brigid, you were wanting to add.
And I also just wanted to add, as we're talking about global growth, we're also starting to see the likes of a little bit of inflation feeding through. If you look at other emerging market commodity-based currencies like the Australian dollar, the Canadian dollar, looking much more hawkish. They're starting to look to hike interest rates. And as much as we've seen an interest rate cut in South Africa and we're looking for flat interest rates for the remainder of the year, I think that's the path that we're going to start having to look at. And what is the impact then going to be on an already constrained consumer? So those are the kind of things that are in our horizon. As you see monetary expansion start to be removed from the system, that's why your growth expectations for the United States are a little bit lower for next year. What are those implications going to be? And specifically when you're looking at growth forecasts, because it was quite encouraging yesterday to hear Ms. Marcus talking about the fact that they're not totally married to the fact that they have a mandate around inflation targeting. They also are looking to encompass other areas like growth and keep it much more flexible, which is opportunistic. Yeah.
Before we let you go, we've spoken about your forecasts on the dollar rand come mid-year. What are you looking for on the euro rand?
The euro rand, we're looking for slightly stronger levels. I think the euro is going to remain under strain for the foreseeable future until there's a pattern in place, and that's going to go on well into May before we even see parliaments voting in terms of funding, etc. I think the rand's going to remain strong. So your euro rand is likely to remain stronger rather than weaker. I think that we must get our heads around, and I've said this before, that rand will remain strong for the remainder of the year, possibly seeing slight weakness towards the end of the year. And that's something you must keep in mind if you're looking to cover your currency either which way, as an exporter or an importer.